Hey everybody, this is Martin MI5 back for another video. Today's video is called, and I've been talking about this for a while in my videos and people not believing me, NIO's Firefly Hybrid, a potential spark to reignite growth in Europe. Now, before you guys start commenting that NIO has no plans of building a hybrid, listen to the whole thing before you say anything. Okay, so here we go with the article. Reuters announced NIO's plan to launch a hybrid under Firefly brand in 2026, targeting, now listen closely, targeting the overseas market, Europe and the Middle East. What I've heard is NIO plans to keep NIO purely electric in China. Okay? They're not talking about their exports. With hybrids now making over 30% of the car sales in Europe exempt from tariffs, this is why they're doing it. NIO's timing for his launch looks quite promising. A $2.2 billion investment from CYVN Holdings and a $3 billion investment from Abu Dhabi government could support NIO's Firefly brand expansion, and they're looking to launch this in late 2026. So really a 2027 project. With hybrids now making up over 30% of Europe, they're trying to get away from the tariffs, basically, is what they're trying to do. And persistent crash and burn and negative cash flow means NIO needs to improve finances in the coming years. Otherwise, large investors could lose their interest in the company. Despite a 90% share price decline since 2021, hybrid launch could be a turning point. I agree. Therefore, I maintain a buy rating with a 2 to 3 year time frame in mind. NIO has recently made headlines after an unofficial announcement revealed that the company's plans to launch a new hybrid under Firefly brand in 2026, intended exclusively, that's the word there, exclusively for international markets, not in China as of yet. Who knows? NIO keeps changing its mind of what its brand is all about and rebranding itself over and over and over, so they might just do it in China as well. Considering that the company's share price has declined over 90% since early 2021, the announcement seems to be light at the end of the tunnel. Supported by a $2.2 billion investment from CYVN Holdings, this strategy aims to be a fresh revenue stream in the European continent where there is a high appetite for affordable hybrids. To be clear, my bold thesis has a long time frame, between 2 to 3 years. Currently, the company is solely focused on EVs, with fundamentals showing a high cash burn and negative operating income. We know all about that. However, I am convinced that the hybrid line in Europe could be a turning point for the company. Therefore, I assign a buy rating for the stock. I will provide rationale behind my rating below, starting with a quick look at price action. Price action. Since its peak in early 2021 at $66, the share price has declined by 90%, currently trading slightly above $5. That was a big nosedive. When comparing the returns of the stock and some of its industry peers over the last 12 months, one can see a clear division. Tesla and BYD are leading in terms of returns, while remaining EV manufacturers are falling behind. Below, I discuss in detail why I believe NIO will be able to turn around. Multi-brand strategy and a potential new overseas hybrid line. Remember, it's not written in blood yet. Never know with NIO. The multi-brand strategy of the company involves operating 3 brands, each targeting a specific market segment and consumer preferences. These are NIO, the brand targets premium EV market segment. Onvo, this brand serves the mass market segment with family-oriented EVs. Firefly, this company plans to launch a brand at an annual event scheduled for December 21st, 2024. Firefly's initial market entry, serving the mass market, is set for China by the end of 2024, with a rollout in Europe in the first half of 2025. At the moment, the company is a pure-play EV manufacturer. However, several sources, it says here, and here, I'm not going to click on them, are talking about the introduction of its first hybrid model under the Firefly brand, targeting overseas markets exclusively. Notice my emphasis on the words exclusively. The strategic decision is one of the key pillars of my bull thesis. As a matter of fact, it may be the main one, considering the dire fundamentals of the company, a topic I will discuss below. It seems that one of NIO's main investors, CYVN Holdings, has put some pressure on the company to improve its sales in markets like the Middle East, where infrastructure is not yet fully developed. And it's not fully developed even where it's supposed to be, in my opinion. Additionally, the European Union has imposed new tariffs exceeding 20% on NIO's EVs for the next 5 years, on top of the existing 10% import duty. However, hybrids remain exempt from these tariffs. Again, I think that's one of the main deciding factors of why they're choosing to do this. At the end of 2023, CYVN Holdings poured $2.2 billion into the company to facilitate the expansion with the Firefly brand. The hybrid vehicle developed under Firefly brand is expected to launch in late 2026, that's what I was telling you, and deliveries commencing in 2027. Therefore, I want to emphasize here that my bull thesis is for longer time frame, around 2 to 3 years. Don't expect shares to explode in December. This is going to be further down the line, like he was saying. Hybrids are kings in Europe. The main reason I'm encouraged to buy the hybrid launch in Europe is because Europeans have a strong appetite for this type of vehicle. To put things into perspective, in August of 2024, sales of fully electric vehicles in the European Union dropped by 43.9%. That's a big drop. That's almost half, marking the 4th consecutive month of decline. In contrast, hybrid car sales rose by 6.6%, achieving a market share of 31.3%. It seems that the increase of hybrid sales attributed to their affordability. Of course, infrastructure challenges play a role as well. However, as a European, I don't think infrastructure is the main contributing factor. Therefore, I support the strategic decision to cater to the hybrid Firefly model to a mass market in this region, competing with models like Toyota Yaris, Ford Kuga, Renault Clio E-Tech. They didn't mention Li Auto. In contrast, the company projects EV market penetration in China to reach over 80% within the next 2 to 3 years. Therefore, it makes sense why they don't plan to roll out the hybrid in their home country. I recommend keeping an open eye for more details on the future hybrid plans as the company's annual event in December. Other growth drivers. Focusing on their EVs, the company has an attractive battery as a service plan. Essentially, NIO's battery leasing subscription plan is designed to lower the upfront cost of their EVs. The battery as a service plan decouples the battery from the vehicle ownership, allowing customers to purchase a NIO car without owning the battery outright. Instead, they subscribe to a battery plan that suits their driving needs, allowing them to swap, upgrade, or replace batteries at NIO's charging and swapping stations. As a matter of fact, I believe this company might be too good for consumers and not so much for the company. If I can swap batteries after a certain time, they don't really care about taking care of the batteries. Therefore, I wouldn't sweat if I discharged the batteries below minimums or left them uncharged for long periods of time. Moving on to the other growth drivers. The company expects production to ramp up to 20,000 units per month by 2025 for the Envo models. Their plan is to open a new third factory to increase capacity for Q3 2025. Additionally, the company has been aggressively building power swap stations with 2,561 stations globally and 52 million total swaps completed to date. Their goal is to have swap stations in every country in China by the end of 2025. To this date, they're getting pretty close to making profit from these swap stations. The company is averaging 30 to 40 swaps per day with a minimum profitability threshold of 60 swaps a day. Finally, management is targeting an improvement in vehicle margins by 15% by the end of the year and 25% in the long run. As a side note, vehicle margin in Q1 this year was only 9.2%. In Q2, it improved to 12.2%. Valuation. A quick look at the valuation ratios of the company shows most of them trading close to historical lows. If we compare these ratios to some of the other competitors, NIO doesn't seem to be overvalued. Table above was sorted in descending order by PB, and if we use PS, NIO is the cheapest company along with BYDF. risk. In my view, NIO is one of the stocks where narrative plays a more fundamental role in their future growth than the current financial results. If we look at the fundamentals today, we consider a shorter time frame, the outlook doesn't look particularly positive. Both operating and net income are negative, and the number of outstanding shares has gone up in the past year. Example, SG&A expenses jumped over 31% in Q2 2024 due to marketing and sales efforts. Did they translate into more sales? Yes. However, of operating income, TTM, sitting at a negative $3 billion, I wouldn't pop the bottle of champagne just yet. The cash flow statement shows a negative free cash flow of $2.14 billion for FY 2023, leading to a negative FCF share of 1.3. The balance statement shows cash equivalents sitting at $3.39 billion at the end of the last quarter. Considering the company had burned $2.4 billion last year, negative FCF, it needs to become profitable in the next few years. Otherwise, investors could lose their conviction in the company. Aside from these risks, there is no doubt that the company will face competitive pressure in the hybrid market in Europe. Additionally, if they outperform the current hybrid manufacturers in this region, I wouldn't be surprised to see new tariffs imposed on Chinese hybrid manufacturers as well. Conclusion. Putting all these factors together, I rate NIO as a buy. I will be direct. The main driver behind my buy rating is the recent, although unofficial, announcement that the company plans to enter the European hybrid market in 2026. NIO's new Firefly brand will certainly open new revenue streams in Europe, where hybrids are in high demand, and less affected by the EU's EV tariffs. Could there be new regulations if Firefly gains significant market share in Europe? That's very possible. But then there's a long path ahead. In my view, if NIO can create mass market hybrid that's affordable and offers features similar to Toyota Yaris or Ford Puma, it could be a game changer for the company in the next 2 or 3 years. Until then, negative income, negative cash flows, heavy spending are serious risks to consider. When looking at the income statement, the current pessimism it just surrounds the stock and is justified. Therefore, until 2026 at least, I don't expect any short-term miracles in profitability. Okay, that was the article I wanted to share with you guys, and continuing to cover this possible hybrid debut of Firefly. There's lots of speculations if they're going to do it or not. I personally think they are going to, because they keep changing their business model constantly, and I think this actually would kind of help them out, to be honest with you. Just like they were saying, there's a real high demand for hybrids, affordable hybrids in Europe. So it will not be in China, it'll be outside. And I even personally think once this thing starts to catch on, they'll probably even start doing them in China as well. They still will run cleaner air than a fully, combustion engine, internal combustion engine. But that's it for this particular video. Make sure you guys like, comment, subscribe. Click that notification bell so you guys will be notified of my daily uploads. I'll be doing videos of NIO and other entrepreneurial videos showing you guys how to make money, in person and online as well. So that's it. Thank you so much for watching as always, and we'll see you in the next video.